Welcome to the Pump and Dump channel for another video, this time making a transaction in the theoretical model portfolio. I fell asleep and woke up, so I'm doing it at this hour. I was going to do it earlier, but I fell asleep before the market closed. Anyway, so key point here is I'm going to exchange safe brokers, some of it, half of it, for Dana shipping. I've done this in the past and it's always proved to be the right decision. The rationale is quite simple. Looking at the rates here, Capesize vessel rates, they are still relatively, let's say, underperforming the smaller vessels. And I think I've explained this in the past, is that Diana Shipping has more Capesize vessels than safe bulkers, and as a consequence, well, not just more in total numbers, but in percentage of their fleet. And as a consequence, I think the performance here will, with Dana Shipping, will capture the rate improvement in Capesize vessels better than safe bulkers will. So the rationale here is, of course, to sell part of it, and I did this in my own portfolio today as well, and buy Dana Shipping. You can see here on the daily chart that this one has gone up a little, but it's ended up on a high. Safe Bulkers had a big rise up to 389 from 329, and then sold off, and has kind of bounced here. This could be a topping pattern in the short term. One can see here in terms of the 5-year chart that we are back at the 2018 level highs. With Dana Shipping, we are not quite yet at the highs, but yeah, it is in terms of the the performance overall, they are kind of similar. One can see that here, that they both just went into the toilet and have gone sideways in a trading channel for many years, from 2009 to, let's say, 2015, and then 2016 to 2021 it's been also in a sideways channel. Same for safe bulkers. So the idea here is just to exchange them to capture the improvement I foresee in Capesize vessels in the future. I think the rationale for why Capesize vessels have done relatively poorly as compared to the smaller vessels is that I think there's two storylines. Not necessarily that they are very meaningful, but I think anecdotally they do give some part of a potential explanation why Capesize vessels are achieving lower rates. And the one thing, of course, has been Vale back in 2019, beginning of 2019, when they had the tailings dam burst and had to shut in some production, like take 10 million tons of annual production of iron ore off the market. Of course, that impacted the dry bulk vessels negatively, and that's kind of coming back on now, I think. So that's a positive. Then, of course, we had with the coronavirus lockdowns in many places, mining companies were also affected, like in Mexico. They just told the miners they can't mine, and that, of course, also impacts the vessels that are needed to ship dry bulk commodities from one place to another. And then we had recently, I think it was China and Australia were in some dispute over some political nonsense, and the Chinese just basically said they're not going to buy from Australia anymore. So one has to know that Australia has traditionally been the exporter to China, and they obviously using large vessels to ship their materials from their ports to China, and that kind of was like dampening Cape-sized vessels. But I saw that I think it was India is going to pick up exports from Australia, and I would assume that they would also be using Cape-sized vessels. So there is some hope, I would say, on the horizon. The question here is, of course, now whether this this transition from safe bulkers into dana shipping is the superior investment vehicle that exists out there. I think it's potentially not, but I haven't taken time to look through other companies in details. I've been wanting to look at Star Bulk carriers for a year now, but I kind of never got into looking at them in detail. I just, I bought some shares and traded them, um, in very small amounts, like 100 shares only. And also Golden Ocean. I think Golden Ocean is the most heavily weighted Capesize vessel ship owner in the sector that I know of, um, and I haven't looked at them either. So I think Golden Ocean is probably the superior choice to choose in terms of the fleet composition, but I haven't looked into it in terms of making a valuation, and as a consequence of that, I want to just kind of avoid, because when I'm looking at putting out targets here, like I have still an upside target of 750 plus now on safe bulkers because of the improved rates, and with Dana shipping I have $14 as a potential target. Yeah, so I think this is kind of where it's at. The upside is favorable, diversification, and also capturing what I think fundamentally is the segment of the market that is underappreciated in terms of the valuation. So yeah, I think that makes perfect sense, and that's kind of why there is this transaction here. Looking at the performance of the portfolio, I think this is something I've not done enough of, but we can see here that oh yeah, there's also some dividends coming due on Petrobras in, I think it's in May, but they're not been paid out yet. I'll need to remember to put that in here next time. But yeah, what was I talking about? I was talking about the performance. Yeah, so up about 128% since inception in middle of last year. The first acquisition, of course, hasn't done so well, but it's in its way. It's doing. It should get back up, I think, into the 30s middle of the year until Q2, Q3, when the updated feasibility study comes out. I think that will give it a pop to higher prices. But yeah, what one could see here, like a lot of the performance has come from two of the stocks, PBF Energy and Safe Bulkers. Of course, I could have been in Dana Shipping instead of Safe Bulkers, and I would have, from like when I exited Dana Shipping here to buy back Safe Bulkers after I had done something similar to what I'm doing now up here. That created a small trading loss, but it enabled me to buy more Safe Bulker shares, which ultimately has contributed to high performance. So I think it's more sector related. The bulk of the performance has come from dry bulk shipping and then refining. I think if I had stayed in Diamondback here, I would have done similar as I've done with PBF Energy. But at the time I had the rationale for why I thought Diamondback would go down, and after looking at the annual report and seeing that they are looking to produce less this year and portraying that they're going to produce what is it, about, let's say, 2/3 of 2019 volumes over a longer period of time, going from 8 years to 12 years, that does lower the net present value by about half, and the market doesn't seem to care, and the oil price is in a very bullish mode, and I'm very surprised about the fact that that the oil price is doing so strong, and it seems like every day the oil price is outperforming refined product prices, which is bizarre, because I would think they would move up in similar amounts, but it's like the demand for oil is greater than the demand for refined product, which is confusing, but it is what it is. So yeah. Anyway, key point here is these two have produced the bulk of the performance. I've not done so well on natural gas here in this theoretical model portfolio as I've done in my own personal portfolio, but it is what it is. It's the opportunities are there, and sometimes you have to jump from one to another, and that is to capture the most upside. And sometimes you jump and you make a decision that turns out to be not so lucrative, let's say. But anyway, we have still here PetroChina, which is very interesting at this point in time. I still am very positive on them. I saw the annual report came out today, or the 30th of April, which is 2 hours and something minutes ago. It came out today, and they also have a webcast, which I listened to a bit of it, but it was really painful listening to it because they're doing it in Chinese and then translating it. And the key here is that in terms of the valuation, I just don't see why the market thinks that $108 billion market cap is appropriate for this company, since the way I'm looking at it, it's got a book value that's about 3 times as big. Their first quarter 2021 profit, I think, was 27 billion yuan, which is like 4 billion USD. So it's about 4% profit on 100 billion market cap, and that is just for one quarter. So if you annualize that, it's about 16%, which is is cheap. And yeah, in terms of the assets are clearly there, but the market doesn't like it, and that's just the way it is. We'll have to see if this will work out going forward in the coming months. Petrobras is also, it's done okay. I mean, I got it near the bottom, I guess. 734 here. There was a dividend that was declared. It's not been paid yet, but I need to remember then to put this one in here when it comes back. Yeah, Goodyear was also a good performer. It's still doing very well after the after they I think they acquired Cooper, but they're kind of just going sideways there. They've been between $16 and $19 a share for the last months. It's just going sideways. Nothing's improving. We'll see, of course, what happens here. And what else can I talk about? There's some minor, profits here. I mean, with CNX, there's not much there yet, but CNX is CNX. They have a let's say a defensive strategy towards the market, which the rest of the industry does not have, and that will kind of work in a way as a hedge, and I think they can still grow their business and create a lot of shareholder value that way. I also saw Cabot Oil and Gas today was doing very well at the open. Was up to 1750 almost, and then it just melted. And I've been thinking about putting Cabot Oil and Gas into the portfolio at these prices in the 16s. 16 to 1650 is a good entry point long term. I think it has potential to go back to 24 like it did in 2020 when it peaked in, I think it was in April or so. 24 is possible, but we'll see whether it does that. I think with CNX that would go to 17 or so bare minimum, and Range Resources should get to 20 or 19 to 20 if Cabot gets to 24. So you can see like the choices are there. It's it's a minor improvement to exchange maybe CNX for Cabot Oil and Gas potentially, but I just don't think this is necessary. And we'll see what happens. So I'm going to leave it with that. This is kind of the let's just change this here because I forgot to do this. Let's put this in here. So yeah, I'm going to leave the video with this. We're getting close to the annual performance from inception in a month and 2 weeks or so, and then we'll see how it's done so far over a 1 year time frame. I only did 20% in these first 6 months, um, but we'll see. Whether it's still at 130, close to 130, or whether it'll be more or less. I'm thinking very positively in terms of PBF Energy still having a lot of upside. I think it's likely to go to 30, and with Range Resources, it could get to 18. So we can see here, so lots of gains potentially. And Safe Bulkers here, you know, maybe it does its move to 7, or maybe it just gets to 5 and has a break, and it just zigzags higher. Um, Not so much, in terms of the upside, it's not so clear to me as with the others, but it's there. And CNX, we'll see with CNX. I think that will probably be not such a strong performer relative to the others, but yeah, Petrobras is still there. Petrobras is good. PetroChina is good. Here I have no clear idea what will be the catalyst. I think with Petrobras it would be like 1 year of the new CEO will probably lead to a re-rating as the market sees what he's done in his first 1 year. They'll probably give like an assessment as to whether they think that the idea that the state involvement in the company was a bad thing. They thought, and if the guy's there and he's producing well for shareholders, they probably will change their attitude and re-rate it back up higher. And with PetroChina, I think this is U.S.-China tensions. Yeah, who knows why the market doesn't like it, but it is what it is. Um, we will see. African Gold Group. I think the key here is to see the updated feasibility study, which should come out in the next, who knows, 2 to 4 months, I would say. Latest in 4 months, I would expect to see the updated feasibility, including the new drilling and the sulfides that they talked about in one of their press releases that they can include in the reserves after doing the metallurgical testing. So the issue, of course, with African Gold Group has been the dilution. They've just been issuing equity at lower and lower prices because of market sentiment in gold. Gold had been falling for like 6 months or so, or maybe 9 months, and the market didn't like that. So they kind of, from what I calculated, were giving gold producers, or like the smaller caps, the explorers or developers, or the ones in between, giving them a lower implied gold price of about 1300. And I've seen that many of the major gold producers are using 1300 as a base case for their reserve calculations. And as a consequence, the dilution in African Gold Group has been unpleasant, let's say, in the last couple of months. But anyway, we'll see. I think this $75 a share target is still valid if they deliver on the on the feasibility study. And if not, I think it does still have a good chance of getting into the 30s, mid 30s again. So I don't think I'll lose money on this one, but it's obviously not been a money maker, and that's obviously a good decision that I explained back in this this period, that I was only putting in 10% of the portfolio, not 20, because it was not it was risky, and things can go wrong. The strategy they had outlaid for bringing the mine into a construction phase at the end of 2020 obviously never happened, because the way I see it, they didn't have the updated permits. They didn't have the opportunity to get those permits updated, and as a consequence, they just basically are exploring. And if they don't explore and show success in exploration, then you know what can come out of it. So there's no re-rating for moving from exploration to development. And I think though, if if they have some good results over the next year or two, um, the market might start pricing in it going to development potentially. But we'll see. It's it is what it is. Uh, it's um, it's always unfortunate when things don't work out as expected, but whatever. So yeah, I'm going to leave it with that. Remember, this is not investment advice, a recommendation to buy or not to buy. You should always do your own due diligence or find someone you trust. If you want to take a punt on names that I've thrown out here, you can of course do that. It's your choice, but not saying that you should do it. And I'm not one of the people who tries to take credit for other people having bought something that they had talked about in the past. But yeah, it is what it is. So yeah, have a good day.